Good morning. Welcome to Bazaar Morning Call. That clearly is going to be the biggest event that we will watch out for. 23rd of May, as the montage told you, 1 billion votes will be cast, almost 1 billion votes. And we will know who is going to be our government for the next 5 years. Clearly, India's biggest celebration of democracy. 23rd May will be the counting day. Well, the sheer announcement, I think, will have a mildly positive effect. It was well known. Usually, we have our results on May 16th, at least for the last 3 terms. The 2004 election, the 2009 election and the 2014 election, the D-Day was May 16. We know because we had circuit filters on all those days, or practically all those days. This time it's just about 7 days later, but it's largely in the price. Everyone knows it's going to be, well, if not May 15th, it would be May 25th. It has to be one of those days. I think the other important point that the market will have to take note of, I thought, was the jobs data, which was pathetic in the US. But look at the way the emerging markets have reacted. It looks like the reaction of Asian shares is that, in fact, the attention to emerging markets will actually improve, or at least that's the initial reaction of Asian markets. Dow Jones, of course, got a big knock, but that's not how Asia has reacted. There's a mild positive reaction, and actually our FII numbers are also indicating that the attention to emerging markets continues, and because we were neglected, we are actually getting even more of the attention. So I'm less worried at the moment about the US jobs data. It could well be one-off, actually, because it's crazily small to be normal. I think we'll have to worry. For us, the positive are that FII flows continue to be robust, and the negative probably was that MF, mutual fund numbers, which came on Friday. The market has reacted to it, and it was probably aware of these numbers to some extent, but that will continue to be a worry, that the domestic flows are not as good as they used to be. In fact, in the income side, they are negative, they're contracting. So year to date, if you take up to February, the contraction is 1.35 lakh crore. That's the amount of money that's flowed out of income funds. So we just have to think about a little, how much of money is available for NBFCs. All that depends on income funds. That's the negative. For me, I don't see anything that can break the range below the 10,750 or above the 11,000. But I'll leave that to Anuj.
Hi, Lata. Morning. Hi, Anuj. Morning. So this global growth scare is real, right? I mean, not just the US data, but over the past 1 week, we've got so much. The Chinese exports were down 20%. ECB has cut their forecast. So maybe this could be a play of emerging markets outperforming developed markets, as you said. That's the trend that we've seen at least. But now, Anuj, morning, you've been saying this for a while, that this market has perhaps topped out, at least in the near term. But now with the election bugle sounded, do you get a sense that perhaps in the very near term, there could be a pre-election rally? Or will the market continue to be within this range?
Yeah, morning, Sonia. It's only 2 days that we've said that perhaps there's a near-term top. Before that, the big rally played out on expected lines. This election announcement, this schedule announcement is a major event for the market. And remember last time when this event was announced, the markets made some kind of bottom and then had a big rally. But what was the key factor that time? At that time, the market just wanted to get rid of that UPA government and wanted Modi. I mean, it was as clear as that. The perception was that we had gone through the worst phase of governance and we wanted something fresh, something good. And that's where Modi came in. And before that, the state elections had taken place. So some kind of opinion poll was already in place. This time, even though, of course, the market would want Mr. Modi to continue, you would still want to see at least 1 or 2 opinion polls before you take a big bet. So that way, for me, I think the near-term range is very clear. It's crystal clear. Thursday's low, and Thursday's high, which is when the market sort of topped out, and Friday's low. Thursday's high was 11,089. Friday's low was 11,009. As of now, there's a risk that the market perhaps has made some kind of double top. But if 11,100 is taken out, then I think you revisit that thesis. Quietly, the global markets have started to correct. So far, we have only been obsessed about what's happening with India, elections. But there's this phase which we haven't ignoring. This is looks like start of something big in global market. Even this MSCI India versus EM divergence, which till about 4 days back was 10%, it's now down to 5%. It's and the major reason for that is because the MSCI EM has corrected about 4%, and while we have rallied. So let's see. Also, the mid-cap index, the rally that we have seen is looking something similar to like we saw at the end of October, start of November, which got sold into. So that's a bit of a risk. As I said, for me, this will be nullified if the market starts to break out once again and starts to see, a good advanced decline once again. Over the last 2-3 days, even the market breadth once again has started to narrow down a bit. So that's a bit of a concern.
Okay, well, yeah, let's see how things play out on this emerging markets versus developed markets debate. But there's also some micro news. Lata, on SBI linking savings deposits to the repo rate, will this reduce the margin volatility that SBI sees?
Okay, that's what the research report is saying. I just want to add a little bit, this global growth. And if there is genuinely a worry, which there seems to be, as Sonia very beautifully put in all the key data that came last week, India may actually turn out to be outperformer. We may fall with the global markets, but we will turn out to be outperformers because we have been less dependent on global trade. So it is negative, of course, for all equity markets if this turns out to be a big trend of slowdown. But even then, it's not as big a danger for India. We have really a very, very domestic market compared to others. Okay, the SBI event. I want to argue that the SBI event is not a macro event. It's an SBI event. And it's a banking sector event for sure. They've linked savings deposits over 1 lakh. How many people put savings deposits over 1 lakh? You would think you would not put so much money in. But actually, they have 32% of their total deposits as savings over 1 lakh. So they have a lot of PSUs who keep money, and it's those institutional money, which is such a large. I don't think other banks will have such a large amount. And that is being linked to repo. It's about 225 basis below the repo rate. And their cash credit loans, working capital loans are linked. That is 25%. Now look at the smartness of the SBI move. Clearly they've been nudged by both Reserve Bank and the government that we are cutting rates and nothing is getting transmitted. So they've come with a very smart move, according to me. 30% of your repo is going to go, of your deposits is going to get cheaper if there is a rate cut, but only 25% of your loans get cheaper because of that. And 25, the loan book is only 70% of the deposit book. Deposit is much larger because another 30% goes to government bonds. So it's such a smart move. It is a margin accretive for them, although they will be cutting. But, about the other banks, I don't know. I think even for HDFC Bank, ICICI Bank, Axis Bank, it won't be a very bad thing because they're largely retail banks. And mind you, home loans will not fall if there is a repo rate cut.
But the other PSU banks could follow suit, right? Other
PSU banks you have to follow suit because if SBI lends to Indian Oil, for instance, a working capital at, 25 basis point lower, even an HDFC bank can't stay apart. They also have to fall in line. But my sense is that for the HDFCs and the ICICIs, this is a smaller part of their loan book. They're largely retail lenders. So they won't be hurt much. Possibly it is the other PSU banks that are going to be hurt because their working capital loans will be more and their savings deposits will be less, over 1 lakh. So chances are it's going to hurt a few of the PSU banks. But for the system as a whole, I don't think it's a big deal at all. There'll be one more cut and that will get transmitted to a small section of working capital guys. It's not really going to make a difference to retail loans. And it's consumption that is the story of the economy. If that is not going to be helped by a rate cut, then, this is not really an economy story. It's a banking story.
SBI specific story.